Question, the most frustrating I have seen in my 22 years. We are going to talk about that a lot. What does David Rosenberg say is going on in the market? How about the fact that Costco sold $100 million in gold bars? What is Lennar doing with their multifamily units? Folks, this is your daily financial news for Monday, December 18th. We are 1 week away from Christmas. I hope you're having an amazing holiday season. Folks, let's get into it. Let's first acknowledge that the real estate market is extremely frustrating. As you know, if you watch One Rental at a Time, I have been in the market for 22 years. Like you, I'm looking at my market every day. I have a buy box just like you, and it is hard. I want to acknowledge that. We just completed our day 9 of our boot camp, and I want to kind of break down some of the questions, some of the topics, and share with all of you what is going on in the housing market, what are people talking about, and again, frustration is a key concept. One, rates are moving the market. Hopefully you know by now, if you follow One Rental at a Time, one of the things I will ask you to do is have a buy box and track it every day. A lot of the folks in the boot camp are acknowledging that rates matter. On more than one occasion, they were tracking properties at 30 or 45 or 40 days on market, days on market. And given that rates have fallen about 1.4%, many of the folks are talking about listings going pending. This is also what I shared the other day in my market. I have been executing a strategy where I offer on non-perfect properties that are over 30 days on the market. I didn't even bother if it was less than 30 days. Well, given that rates are falling, that strategy is becoming less and less interesting. A lot of the properties that I was tracking have suddenly gone pending. Again, this market is very frustrating. Right when you think you are learning it, the market shifts seemingly under your feet. Number 2, we talked about house hacking. House hacking, I am pleased to say, is becoming a rather consistent topic for couples. If you are watching the new playlist, the brand new playlist sparked by Millennial Mike, where we talk to new investors, there are 10 videos there. I think 6 of them talked about house hacking being a key element. What I really wanted to highlight based on day 9 of our boot camp is please make sure you have interest from your significant other. If your significant other expresses interest, I suggest testing that. Take them to a fourplex, take them to a duplex, walk through the property, make sure you have that buy-in. Now, next, you don't have to buy. I know. If you've been looking for 90 or 180 days, you are getting a little itchy. You don't have to buy, right? If you were looking at a market in your buy box and it produces a negative return or a small positive return, it's okay. It's okay to keep the money in the bank earning 4 or 5% money market account. You don't have to buy. It's tough. The Fed broke the housing market. We went from having listings over 1.1 million to just over 500,000. We have seen interest rates drastically change buyer behavior. I know a lot of us, myself included, look on the MLS every day. If you've been in the game long enough, you should also talk to your network. You should talk to wholesalers. You should talk to other investors, and agents, and property managers. One of the things our new investor series talked about is calling for rent signs. Calling for rent signs. You never know. This is a numbers game. If all you're doing after you've learned your market is the MLS, it's tough. It's tough. You can find other ways, whether you're using a software like PropStream or other technology, to find owners that maybe are interested in seller financing, for examples. Next, if you have chosen a buy box that was single family homes and you now know it produces an average return of negative 10%, Welcome to my world. That is exactly where I was in 2001 when I spent a year beating my head against the wall in the Bay Area. The Bay Area of California, the Silicon Valley, never, ever, ever, ever cash flowed unless you were going to put an ungodly amount of money down. Once you come to that realization, I think you have a couple of choices. One, if you want to invest in your backyard and houses don't work, please do what Matt, the lumberjack landlord, has done. He focuses on small multi-family. Now, in his market, single families don't cash flow, multis do. If you are only interested in investing in your backyard and houses don't work, I suggest switching to small multis and see if that works for you. Another option, like myself, is I was focused on single family. 20 years ago, folks, I did not know any better. I didn't know what a duplex, a triplex, a quad was. All I knew was houses and condos. It's my entire experience with real estate. So instead of going to multifamily, which I should have probably done, I went out of area. In today's world with technology, maybe out of state. For me, it was out of area. I found a market, 500,000 people. The numbers seemed to work, and thus Fresno, California. Just know that you don't have to beat your head against the wall like I did for a year. I think if you get to the point somewhere between 3 and 6 months and you're like, it's just not going to work, it's time to change. Now you have to figure out what change means for you in your environment. Next, not enough of us are networking with other investors. A lot of you are doing the work, right? We've been on this channel now for 5 years, and a lot of you are doing the work. It makes me so, so happy. But I think there is gold in today's environment by networking with other agents, or other investors, agents, investors. You have to figure out where you're comfortable, whether you are the financial firefighter who chose Pittsburgh while living in Hawaii, whether you are Millennial Mike living in the Seattle area and choosing Northwest Indiana. There are lots and lots of choices. But I suggest instead of focusing on location, you focus on other successful investors. Be uncomfortable. Growth occurs when you're uncomfortable. Growth occurs when there's a little bit of pain. Give it a shot. So again, at the end of the day, I feel you, I understand. It is the hardest market I have seen in 22 years. But please understand this much. It doesn't give you permission to do nothing. There are opportunities out there. You just need to continually look for them. And lastly, please believe in yourself. Please believe in yourself. All right, so thank you for that. Let's keep moving. How about David Rosenberg? What is David Rosenberg is saying? David Rosenberg is a financial analyst that I follow. He has done some research into the beige book that I think warrants a discussion. And if you don't know what the beige book is something I believe comes out every 90 days that talks about the 18 different Fed regions. The beige book in its latest iteration is important and not discussed. Why is that? The 18 regions where the Fed presidents lord over, all are either flat or contracting. That is very, very different than the previous quarter where many were growing. Again, if you watched yesterday's daily financial news, and if you haven't, I strongly recommend you watch yesterday's daily financial news, because in the first 5 minutes, I broke down why I believe the Fed is terrified. I believe the Fed has finally stopped looking in the rearview mirror. I believe the Fed is looking out the windshield and realized the pain that is coming. We did some calculations, math, adjusting for some CPI headline bad math, and actual inflation is almost 0.5%, not 3.2. If you want to see the math and the logic, It is all in yesterday's daily financial news. And again, David Rosenberg's analysis of the Fed Beige Book points to trouble ahead. In fact, David Rosenberg's own models, I read this after I shared the math with you yesterday. Our own models are tracking sub 1% headline and core inflation next year. Folks, that's what the math I shared with you yesterday is highlighting. Inflation is going to roll over and roll over hard. Next, we can't have an economy that is growing 1% and a stock market where earnings are up 10%. It's like one of those has to be wrong. Either we are growing more or earnings can't be that strong. Next, the market is expecting a cut in March, 67%. So basically 2 out of 3 folks are saying the first Fed rate cut is in March. And then lastly, the market is expecting 6 or 7 rate cuts in 2024. So lots of stuff going on. Has the Fed finally looked ahead and realized what they have created? Is the Fed afraid of perhaps deflation? Again, watch the video from yesterday to see the math that we go through. Fed presidents. Wow. Fed presidents are coming out trying to walk back what Jerome Powell said. In my opinion, the only person that can walk back what Powell said is Powell himself. It doesn't matter how many Fed presidents come out and say, we didn't say that, we didn't mean that, the market heard wrong. It doesn't matter. Unless Jerome Powell comes out and says something explicit, it doesn't really matter. In fact, Fed President Goolsbee is confused by last week's aggressive market reaction. Really? We have a Fed president that's confused that the market heard Fed rate cuts? That's not a good look. That is not a good look. Alrighty, folks. So if you haven't watched the interview yesterday with Dan Bird talking about the stock market, he and I had a discussion right in the middle that I think warrants a review because Dan and I clearly disagree. Dan Bird, who has been right on the stock market, he has been right. We've got receipts. Many of you have acknowledged that in the comments. Dan Bird believes the Fed cannot and will not cut rates unless unemployment spikes. By spikes, let's call it 4.5%. I disagree. And I disagree pretty passionately. I believe if I am right and inflation is about to roll over hard, that the Fed will cut rates even if unemployment stays, say, 4.2 or below. I believe the Fed is realizing when they look out that the economy is set up to contract because of the lag effect from the fastest rate tightening cycle ever, that we are set up to have some pain. All the lending has dried up, all of these other activities, capital investments and the like. So I believe the Fed will cut rates without a recession, without unemployment going up a lot, because inflation is rolling over. And it is my belief the Fed does not want to be that restrictive. They don't want to see inflation at 0.5% and the Fed funds at 5%. That is 450 points of restriction. We have since learned that they want to be around 200. That's what they consider restrictive enough. So again, take a listen to the video. Let me know what you think. And of course, if we have a recession, unemployment spikes, we could both be right, I guess, as inflation collapses. But I think it is interesting when my experts and I disagree about what we see in the future. So take a listen to Dan's interview. I think it went out yesterday at 6 o'clock. A couple of interesting things I saw. How about Lennar? Folks, I think we've talked about Lennar, one of their business units, building multifamily. Well, it looks like Lennar is shopping and is interested in selling 11,000 multifamily portfolio. They have pegged the price at about $4.5 billion, which puts the average cost per unit at 410 grand. I think it will be very interesting to see if any builders or any buyers line up. I suspect most of these units are relatively new. I suspect most of these units are Class A out there. So again, it looks like Lennar, one of the home builders, is looking to exit the multifamily arena. How about Costco? Folks, I don't know if you shop at Costco, but something they've been doing for the last quarter or so is selling gold bars. Yes, folks, you could buy up to 2 ounces of gold bars at Costco, at least as of last quarter. It was such a hit. Costco sold $100 million in gold bars. Pretty wild. And then finally, folks, some updates from Resi Club. If you are not getting your free Resi Club daily, Monday through Friday newsletters, or I guess newsletters. I don't know what you're doing. Articles, I guess. Resi Club Analytics, go there.com, give an email, get free content. Resi Club Analytics says 38 of the 50 largest housing markets are up year on year. The highest being Hartford, Connecticut, up 11.4%. And coming in last place is New Orleans. New Orleans is down 9%, folks, negative 9% home value. So again, 38 are up, which means 12 are flat or down. Again, folks, if you haven't figured it out yet, we do have a virtual event. I did a virtual event because you guys asked for it. As you know, we are hosting the celebration on February 17th and 18th. We are sold out. I think I am trying to process one return, so there may be a ticket or two available later today. But we are doing the virtual event. If you buy the virtual event, you will get the video. Second, I have had questions about, hey, if we go in person, do we get the video? And the answer is, of course, yes. I like giving back. I like exceeding expectations. So if you are coming as a VIP or general admission, I too will give you the video for free, just because that's how we roll here. That said, I've also published the agenda. Trust me, you will want to know who is speaking when. You will want to see some of these people live, and then some of them you will watch on the recording. We have sold 26 tickets. 26. Do me a favor, if you are going to go there, buy your ticket today. Let me know you're coming. Let me know that the significant investment was worthwhile. I will put the link below. Again, you can check out the agenda, who is speaking when, get the video after. It is going to be a good time. Folks, have an amazing day. Watch yesterday's daily financial news if you want to know why the Fed is terrified. Take care. Bye.